Hi guys, it's Marissa here from Rise High, and as promised, I'm tuning into you live today to give you a bit of an update of where things are at following yesterday's Reserve Bank meeting. So many of you would probably already know by now that the Reserve Bank met yesterday for their meeting in April 2020, and they decided to leave the cash rate on hold at 0.25%. I've had quite a few of you ask me what would happen if we went into negative interest rates. So I want to address that question and just talk through some of the RBA's decision and some of the commentary that they've been providing just to shed some light on this. I also want to really talk about what's happening with interest rates and what's likely to happen with interest rates moving forward, and then go into the topic of if now is a good time to refinance, because that's definitely a question that we're getting a lot of at the moment. Clearly, there's a lot of uncertainty in the marketplace, but there are some opportunities. So I'm hoping to be able to shed some light on all of that for you today. So let's talk about the Reserve Bank meeting and the cash rate. So as I said, the Reserve Bank kept the cash rate at 0.25%. Now, this was after the Reserve Bank actually made 2 rate cuts in the month of March, which is extremely unusual. They haven't done that before. The middle of March rate cut was an out of cycle rate cut where they did reduce the rate to 0.25%. Now, the governor has actually said that this is the lower level and they don't expect that they will reduce the rate any further. So what that effectively means is that they don't have an intention to take Australia into negative interest rates. They have come out and said that any further cuts to the rate they don't believe would have an impact on the economy, so they don't believe that it's necessary to go further down. So basically we're at the lowest level, okay? We're as low as the Reserve Bank are willing to go at this point. In terms of what will happen to rates moving forward, basically the Reserve Bank have come out and said that they intend for the cash rate to stay at 0.25% until our economy returns to a point where the unemployment rate drops to 4.5%. and inflation stays between 2 to 3%. So this will take some time. In fact, the governor of the Reserve Bank and the commentary suggests that they're expecting it to take, anywhere up to 3 years. So what that is an indication for us is that low interest rates are here to stay for at least the next 2 to 3 years. So that's something that we can be confident in and know that, for sure that we are in a low interest rate environment. Just some commentary around why the Reserve Bank thinks that the rates need to stay at 0.25% and also what they're saying about the economic conditions right now. I mean, it is clear that this health crisis that we are facing at the moment has resulted in economic crisis as well. And it is expected, of course, that the June and September quarters will be negative growth, so there'll be recession. But the Reserve Bank is quite optimistic that we should return to positive growth in the December quarter. And hopefully, that assumption is based on the fact that businesses will reopen, restaurants and cafes and gyms will reopen so that more people can go back out and work and we're spending money again. So that's the intention, and hopefully by the December quarter, we're back in positive territory. And, when we look at unemployment figures, so unemployment figures are expected to peak at about 9 to 10%. And that's actually a lot better than what they would have been if it wasn't for the government's JobKeeper allowance that they've introduced, where it was expected that the unemployment would go up to about 15 to 17%. So everything's going as expected at the moment. Clearly, we do have some contraction in the short term, but over the long term, over the medium and long term, the Reserve Bank are quite positive about the economic outlook. So I guess the short summary of all of that is we're pretty much at the bottom of interest rates, not expecting to go into negative interest rate territory, and we're likely to stay at these interest rate levels for the next few years. So that's what the Reserve Bank is saying. So basically, what does that mean? Like, what is actually happening with interest rates? And I want to touch on that because, like I said, we had 2 rate cuts in March by the Reserve Bank. Now, with the first rate cut that was scheduled, many of the banks did pass that on and the variable rates were reduced. However, with the second rate cut that we saw in the middle of March, not many banks passed that on to their variable interest rates, but they did make cuts to their fixed interest rates, making for some very attractive fixed interest rates at the moment. So what we're actually seeing is, fixed rates are starting below 2%. Even at levels of 1.79, we're seeing variable rates between, mid to high 2%. So money is very cheap at the moment. Interest rates are very low and not likely to get much lower. But, it is good to sort of keep this in mind and watch this space. So I guess given the interest rates are so low, is it a good time to be considering refinancing? So let's look at some of the topics around that as to whether you think it is a good time to refinance. Well, firstly, obviously with lower interest rates, it may mean that you can get a much better deal if you move to another bank, right? And, just a 0.5% decrease in your mortgage interest rate would result in a $1,500 a year savings. So that's considerable, especially if you're facing some cash flow problems at the moment, or potentially you just want to start paying down your debt faster to reduce your risk. So definitely, there's a lot of competition amongst banks at the moment. They are competing hard for business. And if you do have the financial capabilities to refinance, you are in a very strong position to negotiate very, very sharp rates on your home loan. And if that can actually save you money, that's going to either have the impact of helping you to reduce your debt faster or helping to manage your cash flow during this difficult period. But either way, it means that you're keeping more of your money and giving less of it to the bank. So that has to be a good outcome. So I definitely encourage you to speak to your mortgage brokers and see what potential savings are available to you. Mortgage brokers generally fee-free service, so going out and speaking to them and asking the question, there's nothing really to lose. At the very least, I really encourage you to speak to your own bank to see if you can get a better rate with your current bank so that you can actually save money on your mortgage straight away. Of course, when you're looking at this and if you're looking to refinance to save money, what you're really wanting to make sure of is that the refinance costs aren't going to be too substantial that they make the savings, that they eliminate the savings. So what you want to make sure of is that the savings outweigh the cost. Okay, so that's a calculation that you'll need to do just to make sure that any refinance costs will be worthwhile, because the amount of savings that you expect to make will be far greater. Another good reason to consider refinancing is potentially accessing some equity in your property. And the reason why you might want to consider this if you're in a strong financial position is that what we will find over the coming months is that there will be some great buying opportunities, particularly in the property market. And if you can get yourself in a position now where you set up the foundation to put yourself in a position where you've got some money to play with or you've got some equity that you can spend, then when the good buying opportunities arise, you will be well placed to take advantage of the opportunities that will be presenting themselves in the coming months. So definitely that's another thing that you could consider refinancing for, and definitely a good strategy if you've got the financial position to do so. And the other question that we're getting a lot of at the moment is refinancing still possible? Firstly, are the banks open and can we still do a home loan application? Traditionally, that's involved a lot of face-to-face contact and paperwork. The answer to both of those questions is yes. The banks are definitely still open for business and they definitely want business. Mortgage brokers are still open for business as well. And we have the ability to access all of the technology that's available today to make the process work smoothly using things like Zoom and DocuSign, and making sure that we can actually facilitate the entire process right from the advice piece up until settlement without actually having to meet in person. So definitely banks are still open for business. Definitely they are still approving and settling loans every single day. And all of it can be done from the comfort of your own home. So there are some really good reasons to consider refinancing. Of course, you'd want to make sure that your job is secure and that you're in a strong financial position. But if you are, then you can really take advantage of some very, very cheap interest rates, some very, very good competition that's out in the market, and you can really take advantage of getting yourself set up to capture the opportunities that will be presented in the future. I think I've got a question here from Emily. Let me just see if I can read that. So I'm doing this myself today because obviously we're social distancing. And Emily says, if your financial position remains strong during this time, it is worth increasing your loan repayment amounts to repay the loan quicker since interest rates are so low. Thanks for the question, Emily. So basically, Emily is saying that if the is it worth refinancing just to get a cheaper rate so that you can actually pay down your loan sooner? And I would say absolutely yes. Been paying down your debt and cementing your financial position basically reduces your risk long term. It puts you in a better equity position so that you can take advantage of opportunities as they present themselves in the future. And once again, it also means that more of your money is staying with you rather than your bank, and more of your money is being put towards something that's going to be positive for you and your future and your family's future. Thanks for the question, Emily. Look, that's all I've got time for today. I hope that you enjoyed the segment. We are here for you during this challenging time. Please reach out, ask us any questions that you like. We are here to help you. And of course, our mortgage broking service is fee-free. We would love to speak to any of you if you're considering refinance or you're not sure if you're eligible. Just get in touch. We will definitely do the sums for you and see if it's worthwhile to proceed with a refinance. And if you want to have a chat about anything interest rate related, we're here as well. So please reach out. Please stay safe, keep healthy, and we'll see you again soon. Thanks and have a great day. Bye.